The ballots have been counted and Scotland is staying in. It was a momentous referendum on whether to secede from the United Kingdom, but it is over. Scotland is remaining part of the Union. It has had major impacts on financial markets. Katie Martin is here to tell us more. Katie?
Huge sigh of relief. Few, basically, is what it comes down to. Basically, the risk of Scotland leaving immediately has just gone from the market.
I heard an immediately in there.
People, investors being investors, thinking about the long term, are very much looking at what kind of shadow this leaves over the markets. The short term thing has gone. Sterling has recovered. It's edged back a little bit from the highs of the day, but I wouldn't read too much into that. Stocks are doing pretty well. Stocks of the banks that you mentioned that are domiciled in Scotland, they're doing particularly well. But long term, people are thinking, what does this mean? So Prime Minister David Cameron was talking today about devolving more powers effectively to England.
That was sort of out of the blue in some sense. You would think that after the discussion about union, we'd have more talk about union, instead a little more disunion. Does that get people wondering whether we're going to see this again in some form in the future?
I think it just gets people thinking about political risk as a thing for UK markets again, which they haven't really been since the last sort of contentious general election. There's kind of been nothing. Now it's something that you have to take into account with UK assets, but certainly for the short term, people think that the interest rate path that people thought we were previously set on is back on track.
We're back on it. And that would be, the UK would be essentially the first major economy to start to raise rates again and get back into something that vaguely resembles normal monetary policy.
Yes, exactly.
So that should be good for the pound in the interim, since the other major economies seem, to say the least, further behind in that path.
With the pound is at 2-year highs against the euro, but against the dollar it's quite different. The dollar's just on this. It's doing its own thing. It's a juggernaut at the moment. But another interesting aspect of all this is what it's done more broadly to European markets. Spanish markets doing particularly well today because there's this hope that this kind of neutralises the sting somewhat of the Catalan secession hopes. Catalan bonds, Spanish bonds are doing particularly well, so there are definitely reverberations across Europe.
Now, are we seeing broadly a relief rally across all asset classes? Anything slipping, or is it just up across the markets?
It's up, but it's very much more relief than euphoria. This sets us back to where we were at the beginning of September, before the polls got so close, before people got nervous, but it doesn't really change the macro picture for the UK.
Of course, if you go back to August even, if you go back just 1 month, we were looking at polls that showed a quite substantial no lead, and nobody was really paying a lot of attention to it. It seemed like everybody very suddenly focused on this, really only in the last maybe 2 weeks or 2.5 weeks when the polls started to tighten.
Yeah, it was quite shocking. And over the past couple of weeks, it doesn't matter what, for example, Carney has said, everyone's just ignored him and looked at the opinion polls. That's been the only story. Now the attention is going to go back to boring stuff like data, central banking, all that good stuff.